US dollar is stronger against the euro after solid US consumption data and more signs of moderate European inflation. That's coming up in our 5 Things in 5 Minutes. Then we have part 2 of our bonus deep dive into China's property market and the risk of a black swan event. Here's Raymond Yeung.
Any policy misstep would trigger a sudden and very rapid change in price expectation. If that happens, that will risk the mortgage portfolio in the Chinese banking sector.
But first, in 5 and 5 with ANZ. Number 1. The US dollar is stronger this morning, especially against the euro, after we got fresh data showing real personal spending in the US was up 0.6% in July, while the core personal spending deflator, which is a key thing the Fed watches, that was modest at 0.2% for the month. Here's ANZ's head of G3 Economics, Brian Martin.
When you drill into the numbers, it does show that service price inflation is proving to be really quite sticky. It rebounded to 0.45% on the month, up from 0.34% in June. And I think it just tells us that getting core inflation down in the United States is going to take some time.
Number 2, Europe's core inflation was solidly low in August, with core inflation of 0.3%. That's not much changed from the trend the last 4 months of 0.2%.
That's telling me that there is an underlying improvement in inflation taking place in Europe. I think that would be consistent with the ECB holding rates steady when they meet in September, which would be the first time that they've held rates steady in 10 meetings.
Number 3, Australian capital expenditure was also solid in July, but not too strong, as ANZ's chief economist for Australia, Adam Boyton, tells us.
It's not strong, and some of the lift in investment intentions that was reported today will be, I guess, deflated away by higher costs for machinery and equipment and construction costs. But I think it makes people feel a little more confident that we will see some growth in business investment through the course of the next 12 months. And I guess that sits reasonably consistently with the relatively high level of business conditions that we're still seeing in a number of surveys.
Number 4, there was some reasonably rare good news from China's economy late yesterday. The performance of manufacturing index data was slightly better than expected. Here's ANZ's senior China strategist Zhao Bangjing with the detail.
The key message from this data is that China economic activity is bottoming out now. So this PMI data is an early sign that the economic growth momentum is improving now. We can be more optimistic about the growth outlook for China in the second half of this year. This improvement in PMI data is not a broad recovery of the economy. I think the biggest contribution for the PMI data came from the chemistry and the auto sectors.
Number 5, there's also a sunnier outlook from New Zealand's businesses. ANZ New Zealand chief economist Sharon Zollner reports there was a surge in business confidence in August, as measured by ANZ's monthly business confidence survey.
There are clear headwinds, and you can see some of them in the survey, but it's probably fair to say that actually it's been pretty resilient insofar as these indicators troughed in December, which was quite a long time ago. And I think what caused that was the Reserve Bank in November hiking rates 75 basis points in one hit and talking about a deliberate recession. But since then, of course, they raised a little bit more, but then they called a pause, which I think does seem to be creating some kind of sense that perhaps the worst is over. And indeed, in the month of August, the biggest jump was in construction, and particularly in that residential space. So it does seem that the housing market finding a floor has changed the vibe a little bit there, even though interest rates are still so high.
Sharon Zollner there from ANZ New Zealand. Now for part 2 of our bonus deep dive into China's property market with ANZ's chief economist for Greater China, Raymond Yeung. My colleague Catherine Dyer asked him about the risks of a black swan event.
Universally, many financial crises came from property market. And because property is such an asset that serves both the housing function and the investment function, and there is a very complex financial relationship between property, real estate, and also banking sector as well as the shadow banking sector. Now, for example, we know that currently the trust sector is a part of the shadow banking sector, has also experienced some default because of the property downturn. And at the moment, the formal banking sector remains intact. If there is any mismanagement of property policy in China, that result in rapid decline in Chinese property price, eventually that will spill over to other part of the financial system. And that could easily turn into a black swan event that even the policymakers, economists, and even household might not expect this type of outcome. Is the unintended consequence of any mismanagement of policy measure would sometimes turn into a black swan event. And so I think that the Chinese authorities keeping an eye on that very closely. It is a matter of how the central government can also pass this message to the local authorities so that they understand what they're doing. Will also have some spillover effect to other cities in the country.
Is there any scenario in which banks would move to eject homeowners the way that happened in the US?
Now, at the moment, as long as the household can pay and continue to honor their financial commitment, I don't think that banks will really actively asking homeowners to liquidate their assets. And that's why that is so important for China to have more growth supportive policy in order to secure employment in China. So I think that even if there is a price pressure on China, then the first segment the leadership really want to protect is to ensure that their houses are still providing the housing function of the self-use owners, so that the scenario of asking people to leave and to have to force the foreclosure situation will be less intense than other countries. For example, you mentioned about the US situation. It's very unlikely to happen in China.
Okay, so what's the bottom line here?
I think the bottom line of our research is that currently we don't see there's an immediate risk for the Chinese mortgage portfolio. But at the same time, the policy direction should be managed very carefully, because never say never. Any policy misstep would trigger a sudden and very rapid change in price expectation. If that happens, that will risk the mortgage portfolio in the Chinese banking sector and result in a big financial problem of banking stability and the wider risk to the overall economy.
Raymond Yeung there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, September the 1st. Catch you on Monday with the US non-farm payrolls news, which is out tonight. Brian Martin's expecting 170,000 new jobs. This podcast was recorded for publication on behalf of ANZ. All associated disclosures and disclaimers can be viewed using the link in your media player or the ANZ website through which you access this podcast. All care has been taken to report the views of ANZ Research in the creation of this podcast, but as an independent host, any differing interpretations are strictly mine and not ANZ's. Feel free to contact your ANZ point of contact with any questions.